Okay, let's talk about day three. Day three, and this is our daily range for the prior day's trading. And I've already drawn the lines. That's our high, our low, and our open and close lines. They're very close together, so they are to be considered as one line when they are this close together. But I'm sure you already would know that. Okay, now starting day three, our look at day three. Okay, we started our move down. We started our move down, which, if we're paying attention to our daily head fake scenario, uh, first we're going to have to assume that the market is setting up for an up day. And then we can just simply confirm this by looking at the current hourly trend. And we do that by looking back to the most recent pivot below this pivot here, because we have a pivot that formed above the open and the close here, and that was our signal to go long. But as far as trend, we look back and we see this pivot here. Well, this pivot is higher. This pivot is higher than this pivot. So that tells us that this pivot will continue the trend more than likely. And so that is further confirmation that we want to go ahead and go long and play this pivot. So now we have the head fake tendency on this day, and we started down and we ended up for the day. And once again, it doesn't happen every single day, but at least 3-4 times out of a week, and sometimes 5 out of 5. But to be conservative, it's definitely something to pay attention to. And now let's look at what happened here on this bar. We have a close above resistance, and we have a pivot at the same time. And this is a strong bar because it had higher volume and it closed with a higher high than the previous bar. But now we look and see on our MFI, and we say that the public usually gets faded, and this is a public bar. And true enough, the public does usually get faded, except for when, and we discussed that in the Archimedes videos. If it's a breakout of support or resistance, you can trade with the public, because that means that the breakout is based on a flush of new money entering the market. That means new momentum, new weight. In the case of an up move, more buoyancy force that took it above, and that will usually act like, just think of you're trying to break through a balloon, a ceiling that's made of a balloon, and you stretch it and you stretch it, and finally when that balloon snaps and you break through, the tension built up and the momentum, your hand will shoot right through instead of going up in a controlled fashion. And this in the market is how we look at momentum. So when the public jumps on board of a breakout, then that's okay to jump in. But it's not okay. Now, say if this bar had closed up and was still even strong, but had closed below resistance. When you see a bar that hits resistance but does not break and close beyond resistance or support on a public bar, 9 times out of 10 that bar is going to get faded down. Okay, price is going to turn around and take out those stops. But if it closes above support or resistance, then the momentum and weight created by that new buying or selling will propel the market further. And that brings me to another interesting tendency of the market, and I like to call that tendency, and I like to call these tendencies tracking the herd, because if we understand that we are really dealing with components of predator and prey, and can recognize how the market reacts to these two components of predator and prey, then we can predict the reactions of the predator by the reactions of the prey, and we can predict the reactions of the prey by the reactions of the predator. And that will give us another really solid indicator here when we look at the MFI indicator. Now, the public bar is green. We'll take this bar here. Now, each and every day, you notice that the market that's just typically at the open doesn't just break with a big move one way or the other. There's usually some meandering around before the market makes the true move or starts really becoming active for the day. And typically, and you will look back on your charts and you will see that this is true. Typically, the real market activity starts when the public enters the market. I mean, after the beginning of the trading day, and then time goes on, and you see that first green bar, you see that first public bar, and now after that occurs, the market is ready to start becoming active and to begin its move one way or the other. And that's a great timing indicator for situations when you don't want to wait. If you want to know exactly if you're going to win or lose on a trade without wringing it out over time, your best timing indicator is going to be that green bar on the MFI indicator. Because, and the nuance to that is this: when you see a public bar with, and the price action occurred with the trend, okay, price will typically continue in the direction of the trend. When you see a public bar that goes against the trend, price typically will reverse. Now, so really, if we look at the day we're on, day 3, and look at when the public first came in, and let's see what happened. The public came in here. Let's see here. Public came in here. Okay. That's when the market started this swift move up. Okay. The day before, the first public entry came right at the open, and we moved up, a couple of bars pretty quickly. And but we know that the first move is usually a head fake. But this is just to let you know that the real activity starts once the prey enters the scene, because now the predators have something to chase. Let's go another day. Okay, we started moving even before the public here, but you see the public entered on this bar, and it broke down through support here, and which continued a nice down move, which we had. The day before that, we had the public came in right at the open here, and we had a nice little move up. But then again, we know the first move is usually head fake, and we stopped up here right at first resistance, as would be expected. But just to let you know going forward, and we'll be talking more about this because this is so important. You can almost base an entire trading strategy just off the MFI indicator, and when the public enters and exits the market. But looking back at day 3, we can see that after we got our close above resistance at this point, and our next resistance level is yesterday's high, or the prior day's high, and that's this line here. And you can see we went up, we closed above it, and now this was resistance, and now it's support. And just once again to just show you how that these lines do actually act as support and resistance. I mean, you can see how the next bar stopped and bounced right off of the yesterday's high right here. So now once we get above the daily range area, if we get above the high of the day or we get below the low of the day, well then once that occurs, we need to draw another line at the very next, since we're moving up, we need to draw a line at the very next resistance level overhead, and that's the next low, prior low that's overhead, and that's going to be down here. And as we can see that after we get our bounce off of yesterday's high, we move up and we do get a close even above this resistance level here. Now we got a close above resistance. Who was in on it? The public. Okay, but now it brings us to another interesting point. After 2 or 3 public bars for the day in one single direction, then you can start anticipating a reversal. You know how we say that if it breaks above support or resistance, okay, if it's a public bar, it's good to go with the public. But now